Thank you all for joining us this evening. I'm just going to need to adjust my microphone slightly. I don't want heavy breathing noises. Somebody's decided not to fit my ear as well as it usually does. Anyway, let's begin. So it's 9th of October 2014. We're going to be looking at training for traders. So tonight's training, we're going to have a look at the markets. We're going to have a look at how are our markets changing. Well, that's a question we're going to be asking and answering. Fundamentally, quite basic assessment of it, but important enough to trigger off some changes in what we do. So how do we adapt to changing markets? And we'll talk about missing an opportunity relatively briefly, and then we'll actually put missing an opportunity in context with today's live trades, or more today's trading session rather than today's live trades. And then we'll talk about how you should come and join us and learn how to trade well as well. So let's have a brief look at the markets then. Dow still open at the moment. Go back to a daily time frame. You can see here that if you look on the yearly, if we put a yearly candle on, it's going to take us back some time. See, we're really struggling to stay positive this year, considering we've had some really bullish periods and we've made some all-time highs. You can see we've only put on 0.49%. It's looking like a spinning top for those who like candle theory, albeit there's not really much you can act upon on a yearly time frame, but you can see there that we're barely sustaining those gains we've put on in the year. It's looking pretty bearish again today. Come down and retested that full retracement of that last move that we've marked up with the fib. I've not actually looked at the market for the past couple of hours, but yeah, it's breaking down quite nicely. Managed to get a trade on this afternoon that we'll have a look at, but it has sold off quite nicely. It's really threatening that low at 63. I wonder if we're going to close below there. So interesting to see how the year's ending. We may end up with a negative year in this case. Similar story on the DAX. Took a trade this morning on the DAX we'll have a look at as well. Nearly retraced that entire thing. We've got marked and fib, got a couple of areas of interest here if we end up going down to this sort of 8913 area, 8900 area, potential long for us there. I assume we'll be gapping down tomorrow. I've not looked at the out of hours price action, but again, if we go on the yearly candle on the DAX, we are now in negative territory. We're again bullish, hit 10,000, and we've come off. So we've had a couple of positive years, more than not over the past 5 years. So looks like it might be heading back down as well. But that's interesting to see. Interesting to see how the volatility is increasing as well, which is pretty much the important things for us to look at. And of course, final look at the FTSE, what we're doing. So the FTSE again reflects the DAX. FTSE's not been as keen to get carried away with all-time highs, and it may be a case that it's just these. We're going to have a big wick. That's the all-time highs on the two other markets. So they're the three main indices we look at. Just interesting just to have a yearly look at them. It's not massively significant for our intraday trading, but it's interesting just to we've had some very bullish parts of the year, and it seems that sentiment is changing at the moment, and we appear to be technically breaking down. So how are the markets changing from more of an objective point of view? And by that I talk about over the past weeks and months rather than anything longer than that. More so weeks. That's more of an interest to us than given our time frames we trade on. If we have a look here, for those who know anything about the way we trade, we're very keen to monitor ATRs, and we use 3 of those. We use we look at 20, 15, 10 and 5. You can see particularly on the DAX, you're seeing some pretty big ranges on the DAX. If you're looking at past 5 and 10 trading days, you're looking at pretty significant 140 point ranges with quite good consistency as well. We're not seeing that we saw over summer where we're seeing some real wider standard deviations. You're getting quite extreme small ones, quite extreme big ones, and it was pulling it up in the middle. or averaging out in the middle, of course, and whereas here we're seeing a bit more consistency, and certainly seeing some very big ranges on the Dow as well. Yesterday's, look at these, well into the 200s of recent, so we're starting to see that ATR and volatility increase, and there's the S&P as a reference point as well. This is just a basic heat map. This is available on our website every day. It just gives you an indication of the range and volatility. Without range, without volatility, you can't really trade. Or you can, I guess, if there's no range and volatility. There's certain ways you can trade, but again, that's taking into account the range and volatility. There are some trades you can trade when there's not much range and volatility, but at the moment there certainly is. So you've always got to keep an eye and monitor those sort of things. So what we can look from there is we can see there's an increased ATR. We can see larger gaps, which is no surprise. You've seen the Dow sell off now. That's probably going to mean there's going to be a decent sized gap on the FTSE and DAX in the morning. So there's certain trades that will benefit, there's certain it won't. See greater momentum. We're seeing levels break with greater conviction. We're seeing stronger reversals. We're seeing just good momentum in a general trending higher lows, lower highs, lower lows type way, in just a traditional trending way the markets will do. And most importantly, we see opportunity with changing markets like this. We see opportunity when the markets go a bit more flat and less volatile, but we also see it with here, and that's because of what we're about to talk about now. So how do we adapt? Well, you've got to have the right strategies for the right market conditions. That's fundamentally important. I mean, sometimes look at our trade log and there's probably about 15 defined strategies, and some, the frequency goes in and out depending on the market conditions. It's just like the tool for the toolbox analogy. You've got to have the right tools. It's as simple as that, really. So what we're quite keen on at the moment is basic positional trading with rock solid trading psychology, and we'll give you a couple of examples of those in a moment when we look at our live trades. But there's no reinventing the wheel in trading. If you're doing support and resistance breakouts, using indicators, having lots of indicators, having very few indicators, price action trading, basic positional trading, you're not going to be doing anything that no one else is doing or not done before. The question is, how well can you be how disciplined can you be doing it? What skill have you got to recognize the opportunities and then execute them? Because, like we always say, hindsight trading's easy. It's like here, you'll probably you'll find someone on Twitter or something saying, oh, I went short here and then the market held and I've held a short and I've made loads of money. And it's like, well, the market didn't look like that time, did it? If you were going from yesterday, it was looking pretty bullish. Held that level, we got marked up there and it's held it, so what's to say it wouldn't have challenged 17,000. So very easy in hindsight to talk about opportunities. Oh, look at this breakdown here, could have easily taken that breakout, and that's not the reality of trading. The reality of trading is you've got to make decisions at the time, which is the difference between people who teach and then people who actually do it as well. Analysis, testing, reviewing and trading. We spent hours and hours just going through charts and seeing what's working and what moving averages are working, what basic geographical and repetitive patterns are we seeing, wedges, double bottoms, double tops, breakouts, breakout Bs where it gets retested, momentum, reversals, how the reversal's working, is it faking out and then holding back above, do we want to close the candle, etc., etc. And constantly the team of three of us are just going through these things and just making notes, looking at charts every day, marking the charts. So putting all this hard work in that obviously benefits us because we make money and benefits our members because we get to benefit from that. That's hard work, and that's just the standard life of professional trader. You've got to work harder at doing things. And you can make if you see ATR, volatility, VIX, I guess there are other measurements as well, longer term measurements of momentum and volatility as well. You can see when the last time the markets were like that or what was working in those conditions. If you've got an extensive trade log like we have, where we've got 480 trades meticulously recorded over the past year, and you can look at when were the ATRs the same as last year, what we're making profit from, can we revisit that, how are we trading that, how can we make it better, and just building up this portfolio, if you like, of knowledge in order to make the most of the opportunities. And one of the things that's quite difficult for traders, you might have something that's working for you, and then the market conditions change and it stops working for you, and it becomes very hard to give it up, and you become very stubborn with it, and you've got to be quite nimble on your feet to recognise when something's not working. You know, there's for example, a very basic example is you might take a pullback to some moving averages, but because the volatility is increasing, the pullbacks are stronger, so you're getting stopped out before the market goes in your way. So a strategy that might be working 1 month may have to change the next month. You've just got to be nimble enough to recognise when your strategies are stopping working, and sometimes that can be masked as just drawdown. You might have a sequence of 4 losers in a row, but the reason isn't just naturally the drawdown of the strategy. It's actually because the market conditions are changing and not suiting it. So, you know, if you recognise that, you've just got to not be stubborn and force it, and just put them on the bench and pick another suitable player if you like to take its place. So let's have a quick look at missing an opportunity and what to do. There's lots of opportunities in the market, particularly when we've got a 1 minute momentum trade that we're going to talk about at the moment, and it often throws up multiple opportunities a day. It can be 5, 6, 7, and you have to focus and concentrate, and sometimes it can look like I mean, there's reasons we don't take them, but let's for example say that if this weren't in the, you know, that could have been a legitimate opportunity for a long pull back to the moving average after making a new high. There were reasons we didn't take that one, but you know, you can look at a chart, or you can just see that one go, and you may have had an opportunity to get long there, make 10, 15 points, which is what we'd probably want for a 1 minute little quick in and out trade. And you can miss that, for example, and then when the next time you get a moving average pull back here, which wouldn't have yielded as many points, you may have ended up break even at the end, but because you missed out on the first trade, you're hesitant in taking the second one. And you know, when you're trading on an intraday basis, no matter how good you are, there are going to be opportunities that you miss for whatever reason. It's as simple as that, and you've got to learn how to deal with that. And you know how that. A couple of things that help with that. You've got to remind yourself the market will always be here. The market always needs to move, or people can't make money on you know, the smallest retail scale or the largest scale of investment banking and hedge funds and institutions. The market needs to move, and it will always be here. So don't worry about it. And some, you know, if some symptoms of that, if you can't pull yourself away from the market because you think you're going to miss out. I remember years ago, I had a good trade in the AM session. It was in high volume hours between 8 and 10 o'clock on the FTSE. Good trade, made some good money when I was starting to increase my leverage. And I went to the gym after, almost as a reward, because I find training keeps you disciplined anyway. And that was the first time I didn't feel like I was missing out. I'd usually watch the market after 10 through 11 and 12 when it was all choppy and low volume and rubbish, and often give my money back. That was the first time I remember not caring what the market had done. Now it's just second nature. I couldn't care less what the market's done. Made a points, made a money today, and I couldn't care less what the Dow's done later on. It sold off quite significantly. But do I feel like I've missed out? You know, it probably was a breakout strategy we could have taken today. Even in after hours, but do I think like I've missed out now? Of course, you've got to balance that with the amount of time you need to focus, and obviously the benefits of trading are having lots of time to yourself. You know, what's better than trading 8 till 10 and then 2:30 till 4 o'clock and then going and doing something else? That's the way you want to live your life when you're trading. You want as much time as possible. The fear and regret of missing out will destroy your trading. It's one of the biggest psychological flaws. The reason I've spoken about it today, I was having a chat with one of our members on Skype about this over the weekend actually, about how they feel like they've been missing out, and if there's an opportunity it wrecks the whole day. And a lot of traders have been there. But if you can't do what you need to do, and we're not going to go into the psychological work you need to do, if you don't master that and address it, then it will destroy your trading, because it will make you a revenge trade. You know, it will make you, as we demonstrated on that DAX a minute ago, you won't execute the next trade because you'll feel like you've missed out on the other one, and you know that still can be quite a testing thing. You always think the market's going to be against you. You might see a couple of setups work and you've not taken, then you take the one that loses, but that's just the nature of probabilities, and you can't let that thing get to you. You can't well, it says chance the past. That's meant to be change the past. You can't change the past. Type in rather quickly. So, you know, once an opportunity's gone, there's nothing you can do about it, so it makes no sense to worry about it. That's not how we work. We work by association. The most immediate, you know, the things in our past, particularly the immediate past, we're likely to think will affect the future, and that's a difficult thing in trading, because trading doesn't work like that. The market doesn't care less what's happened. It only matters what happens in the future, whereas our brains aren't wired to look like that. However, you can use it to benefit the future, though. As I say, when we do our reviews of our charts, I'll just get quickly get a couple of charts up of just an example of how we do our review mechanisms. Just bear me one moment. Let's get one. So this is how we go back, and this is for one of our strategies at the moment. This is how we go back and review it, mark up the charts on a daily basis, and talk about the opportunities that could have been taken, why I may have taken them, why I may not have taken them, the advantages, and then noting what certain indicators and things are showing. So this is a constructive way, and when you just first trading a strategy again or developing a strategy for the current market, you're going to miss out on opportunities because you're not going to recognize them all because you haven't developed a strategy as much. But rather than regret them, turn it into something constructive. Say, well, okay, I missed on that one. What were the signs that I could have recognised that? What would stop me from taking that setup? And this is the way you can let the past affect the future, by doing it in a constructive. And we've got just hundreds of these for different strategies, just marked up the charts and just looking as reference points. That's some of the background work we do, just to give you a quick insight. But that's just an example of how you can use missed opportunities to benefit the future. So let's have a look at trades we took today. We're going to go through these in real time. Got through most of that PowerPoint relatively quickly, but this is the more interesting stuff, and this will raise some relevant trading points. Give me 2 seconds while I get this ready. So we took 2 trades today. We took one in the AM, we took one in the PM, and these strategies are sort of the ones that are coming out because of the increased ATR and things like that. So let's just have a quick look at these. Not a quick look, we'll have a detailed look at them. Okay, so hopefully everyone can see that. That's our recording of today's session. This is what we record our live room. This is what's projected to everyone who joins our webinar software that you've joined now. It's sort of a screen within a screen, but that's how we display things, and so people can see what we're doing. We're just waiting for a momentum pullback here. Looking to get in here when pull back to that moving average, and hopefully see some further downside momentum. That's one of the pivots there. I'll put the chart up as well. So it's all good and well seeing the trades in hindsight. What time was that? It was 9:31. Okay, so just go back on this chart. So it's very easy to see in hindsight, saying, oh, look, well, excellent, you got a pull back there to you. You could have gone short there, but you might not want to go short because it goes up, and it's actually a break-even trade, but it's just going to show you the management and importance of it. So it's very easy in hindsight to look at a chart and see what you could have done and should have done and things like that, but it's a lot more difficult to actually take trades at the time, and that's why we record our trades and obviously take them at the time. You'll never see us talk about things in hindsight or retrospect. So we're just waiting for the market to pull back here. We've got 2 accounts here running, a room account here. We're running one of our personal accounts at the top here, and we just put the P&L on there just to give you a reference point for the sort of sizes we trade these strategies at. That's £30 a point on the DAX. This is £10 a point on the DAX. And so what we're looking for is a pullback to the moving average, and then we're looking for at least 10 points out of this trade. So we're just putting our limit order in a position that we're happy with. So we get an initial amount of profit. We see about £100 profit on the £30 a point. And so what we're looking for constantly, this is a basic momentum trade on a 1-minute chart. It's quite quick in, quick out, or it can be as well. So you've got to make sure you're ready to kill the trade when it's appropriate. And you've got to make sure you've got the right psychology. And the benefit of trading like this, and the reason we trade in front of our members like this, is if you can trade this sort of strategy well, then this is all the trading psychology you need, because this is fast in, fast out. This is like all the trading emotions rapidly at once. It can quickly be a winner, quickly be a loser. You might have to quickly kill it. You have to quickly think about where your invalidations and where your stops are and things like that. And it's very quick fire stuff. And saying to our members at me, just trade this for a month, and see how we manage it, see how we take losses, see how we take wins on it, and it'll be a good demonstration of the way you need to trade in order to be profitably. But anyone who can master sort of quick fire 1-minute entries like this will set themselves up pretty well. So quickly, already in this trade, we've only been a couple of minutes. We need to decide, you know, where does this trade become invalid? Bear in mind we're looking at 10 points either side on the DAX. It's not particularly. We've got a stop up here, but do we need a stop up here? You know, if we're looking for technical pullbacks to the moving average, they move away pretty quickly. You know, you saw here moves away. So here moves away pretty quickly. So we don't want it hanging around. It's a quick momentum strategy. So if we start breaking back above up here, you might say, well, that's pretty tight. Well, it is pretty tight, but when these go, they go. Then we're not really interested in the trade because we're just looking to get on the momentum. The whole point of a pullback is you're getting the best possible entry. Sometimes the market moves away from you, and that's fine. That's no problem. So we're always there. Got a deal tickets up ready to close it. Like I say, keep in mind these are two separate accounts. This is one of our personal accounts. We trade in the background VTX, but in the room we're currently using IG probably primarily because we can just show the things on the spread betting chart a little bit easier for people, for our members. That's the reason we use IG, because we can use Pro Real Time, but personally we use ETXs. We get slightly better executions. But so you can see here we've brought a stop in. So that raises an interesting question about risk reward. Well, we initially had a stop and limit at 15.15. So for the first 2 minutes of this trade, well, we would never let it get to 15, but let's say theoretically you've got the risk reward of, you know, you're risking 15 points. But within 2 minutes of the trade, we've already defined where we don't want the market to go and where invalidation is. So we're saying we don't want the market to go above here, so we bring a stop in. So that's not strangling the trade, that's legitimate invalidation for this time frame, for this sort of trade. So if the market breaks above, didn't want to be out of the trade, but now we're risking like 2 or 3 points, which is tight, but you know, that's the sort of tightness you need to deal with, and if you get good entries, that's the sort of tightness you can deal with on this trade. So we're pretty happy with that. And the risk reward of a trade isn't just what it initially is. You can bring your stop in and look for invalidation. Even when you're in a winning position, you can very quickly consider. You know, you need to be considering where invalidation is. Where don't I want the market to go? Or where will if the market goes, where will it show me my trade no longer has an edge? And you know, it's good practice. It's doing this all in very, very quick time. It's very good practice, and you can trade in any time frame if you can do this. If you can think, make good decisions, get a master your psychology on a 1 minute chart, you can do it on anything. You know, I genuinely believe that. So looking reasonably good there. It's broke the low. Seen about what, 126 quid on the top, but nowhere near enough sort of money. 135, 150. But that, you know, we don't snatch profit. We're not even bothered about the money. I mean, this is the most important thing. Here is the points, and I actually like that because it shows points. It doesn't show pounds. So you don't worry about your pounds. You need to get that. You need to get that bloody pound symbol, or euro symbol, or dollar symbol. You need to just worry about points. What points are you risking? What points are you making? Because trading's a numbers game, and the best traders can reduce it to a numbers game. So I don't care. I've seen 150 quid at the top. It doesn't, you know, it doesn't mean anything. The fact I've only seen a few points means I'm not ready to take profit there. So what we're seeing now is we're seeing the market start to break back up, and we're starting to see, well, is there really a continuation of momentum here? We've got, you know, that wick there, that was looking promising because it had just taken out that low there. You know, ideally we'd want this next 1 minute candle to carry on down here. That would be the logical pattern of momentum, but because we haven't got a magic crystal ball, we don't know. So all we can do is control ourselves and control where our invalidation is. So now we're preparing to get out of this trade. We do have a stop. Necessarily mean we need to take it there. And you know, there's two types of invalidation. There's a level invalidation. If it goes there, I don't want to be in the trade anymore. And there's also time invalidation, but that broke back above. So we took that loss there, which was practically break even. But if we have a look on the DAX chart there, it actually went up a fair bit higher as well. Got out around here, went a bit high. It came down eventually, but you know, it's careful not to get hindsight bias. You make decisions at the time based on invalidation and based on levels. You know, you don't worry about what happens, you know, here, and eventually it goes down. That's not a problem. You just wait for the next opportunity. You know, you don't worry about what happens next. So in the AM session, we had a break-even trade. I think I lost 0.9 points or something similar to that. So absolutely nothing. Practically a break-even trade. Okay, here's the trade in the PM session on the Dow Jones Industrial Average. So again, let's have a look in hindsight. What we have a look at. We just get a Dow chart up. 1 second. Make sure that fills the screen appropriately. There we go. Where am I? Okay, so we had the Dow here opening early doors. Let's go on to a 5-minute chart. This was a 5-minute time frame trade rather than a 1 minute. So we saw the Dow coming down here, broken down. We saw it hit the pivot, and we're thinking that's very, very nice and technical. Hits the pivot to an absolute tick. It would have been quite aggressive, but you could have gone long there, you would have made 30 points if you'd held. But that's quite aggressive, to be fair, the way it was selling off. But we did think it may hold here. But so do you feel like you've missed out on an opportunity because you could have gone long? No, you don't really. Then it comes down, tests it again. We have a slight higher low and higher high, which would indicate the market may carry on up. It didn't. It carried on coming down, so we don't worry. Hang on a second. Let's try again. And then the market's bothered to go all the way back up here to 16,934, and yet it's still not got the energy to get any higher. And then the sellers have come back in the market, come back below the moving average. Got a moving average cross here as indicated on the MACD. We're starting to see some downside for momentum as indicated by the MACD. So we're thinking, right, if this pivot goes now, it's going to pop and it's going to go a decent amount of time. So, let's get an order in the market and see what opportunity we can see what opportunity is offered. A 20-point stop, that's all we need on the Dow to show us we're invalid in case it comes again. But we're thinking it's quite probable to break here. We're seeing some good downside momentum. The MACD is indicating that. Steepness of the moving averages is increasing. We've tested the pivot. Now this will be the third test, including that one there that was fractionally above. I think there's a good chance it's going to come down. So we put our order in the market at 82.1 on the sell stop order. So you can see here, this is what it looks like on the at the time of the 5-minute chart. They got the 1-minute chart there just to get a bit more detail. And we're also looking at the S&P as well, because if that goes through its pivot, you like to see some decent downside momentum. This is quite nice. What we saw here, got a nice little stall above the level. We didn't want it. It came down. Sort of last people, I guess, were getting out, or the people getting out of possibly some short positions, and just seeing this little bounce here, and we're thinking that's great. That was a really nice indication that this may have gone here, the fact that's bounced up, because if it does end up doing a full reversal again, then we don't get in the market because we've put our order in the right place. We were close to getting triggered, and had we been triggered, it wouldn't have been an issue. We'd have still been in the trade because it wouldn't have come and hit a stop, but it would have been mightily close now. So we were quite happy to see that. And you can see here a little bit more detail on the 5-minute chart. We've laid another wick there. That's the third test. So you could consider on the 1-minute chart this is going to be the fourth test. So we're just waiting patiently, see if the market gets us in, but like I say, seeing it stall and not making a new low or making a fractional new low, it did make a fractional new low, and not triggering us is absolutely ideal, and we're quite happy with that. And you can see how hard we're working on our strategies. We're just letting our members know here we were in the background doing some strategy work, but we still had time to take a trade. This is your ideal scenario for a breakout, just stalling below the line. And you're seeing it's looking a little bit weaker, and we're watching this in real time. And again, this is the benefit of recording trades. You can see what decisions you made at the time, not what you made in hindsight. And also, the reason these videos are so good is you get to see how it feels at the time as well. So we're coming down now, we're holding below 16,900. You might see a little bit of discrepancy here between these two different charts. That's the real market, as in data from the actual exchange. This is the spread bet market, so these will be slightly different to one another. But one you'd see more interested, you want to see a low on the spread bet market rather than, and then the real market, and then the spread bet market will follow. Not the details of the benefits of that. Seeing the S&P make a new low, slight concern the S&P is not broken its pivot, but if you're looking for levels you can on indices and stuff like that, you can always find reasons not to trade. Sometimes you just got to get into it and not worry about it. 20-point stop, £5 a point on the room account, £100 risk, £30 a point on one of our personal accounts, which I think, yeah, 600, just couldn't work it out in my head. So we're looking for about 1 hour. Very rarely do our trades end up taking a full stop, so if we take 1 hour from a trade for the initial risk reward, we're quite happy with that. So we can see the real market. We're holding a little bit above on the spread bet market. You can see it comes up we get a few points there. This is a personal account up here. but the real market's holding below. The spread betting market's messing about. That's not an issue for us. We couldn't care less about that. You can see, but the real market, look at this nice solid hole below the level. Big, thick, solid 5-minute candle. Just holding below the level. Great indication for us. Don't care what that's doing because that's, like I say, spread bet market. We're more interested in the real market. And then you're thinking, well, this is looking heavy. This is good. It's about to break the 59 EMA. Exponential moving average. S&P is looking heavy on the right-hand side. And with the Dow, very quickly you can find yourself in a pretty decent winning position because when it moves, it moves. So we're quite happy with just 20 points of profit here, but at the same time we're going to give it the opportunity if it really wants to move. 30, 40, 50 point move on the Dow can take seconds, well, at least even minutes if you like. In particularly with the volatility in ATR, we're seeing 180, 200 odd points movement, so it doesn't take much. Next 5-minute candle could easily lay a 50-point move for us, which would be great. But at the same time, I'm quite happy just to see 1R. So starting to see some lower lows here. Next 5-minute candle's about to get printed on the real market. So remember, we're looking at different data here. 1 minute on the left, 5-minute here. So what we want to see for the next 5-minute candle is we want to see a new low. It's opened at a new low, very slight gap. And we're wanting to see the continuation of this thickness. Big, thick, solid candles is what you want to see with momentum. That's a great indication of momentum. You don't want to see wicky, messy about, choppy stuff. You want to see big, thick, solid momentum candles. So we see a nice continuation, and quickly we're starting to get about 20 points up there. Slight different prices on the spread betting market, and sorry, between the two different brokers, but they pretty much catch one another up. More importantly, we're up 18.2 points. So we're going to let a trade that we're up 18.2 points go offside. Of course, we're not going to do that. We're going to continue with, we're going to protect our winnings here. So very quickly, we've been in the market, 2-3 minutes. Very quickly, we're in a risk-free trade, short of any obscene slippage or anything like that. And that's really important for us, is to get in a risk-free position. Professional traders manage their risk. Even though the market's going in our favour, and we're seeing some pretty decent profit, I think probably seen about 500 quid up top, 100 quid on the room account, 20 odd points. We're not thinking, very easy to get greedy and forget about it. And if the market comes back on you now, you can freeze and think, oh no, I've lost all that money. But straight away we're thinking, right, we don't want this market to come back on us. Let's get a stop in that break even, slightly positive, or maybe a +1 position, beyond the spread. Let's make sure we protect it. And what a great position to be in, a risk-free trade. And now we can concentrate on taking some profit if we want to. Like I say, we're quite happy with a quick 20 points, but at the same time, we want to give the market an opportunity to move. What we see here is the S&P pivot's not even held, and the S&P is a pivot monster. It tends to hold them very well. So that was a good indication. So that was about the max profit we saw, I think about 24.2 points, which equated to about 630 quid on at £30 a point. And, at this point, I'm not being greedy. I could take profit. I'm prepared to. But at the same time, I'm not going to strangle the trade. If this really wants to start getting some momentum and we start seeing some big moves, then it can crack on. It can move. It's no problem. See 40 points, I can scale out 50% because then that means I've taken 1R. So these things can happen quickly, and you've got to have an idea of how you're going to take profit before you get into a trade. You don't want to be flapping about, and at the same time, the balance for us is giving it a little bit of opportunity to really get going, but at the same time, we didn't want to let it start retracing, which it can do as well. It can retrace, come back, take your break even, then carry on back down. I pay myself as the money makes market available to me. It's one of the principles that Mark Douglas, the trading psychologist, said, which basically meant take profit when it's offered, providing it's not snatching profit. There's no logical levels down. We did have a fib off the chart, or a level down at 53, but there's not pivots, there's not any big support and resistance that would mark up the blue line, so there's no reason this market couldn't have continued sailing down. So we're giving it a little bit of opportunity here. I want to see some lower lows on the 1 minute. Starting to see a little bit of stalling here. So I'm thinking on this time frame, this is sort of the most opportunity I want to give it. So I'm thinking, right, we're going to 20 points here. Oh, we're going to take some profit here. So we decided to take profit there. which was reasonably well judged. You can see there. So that just gives you, different. It's the same. Like I said, this is the important thing. The points here, whether you're trading at £5 a point, whether you're trading at £30 a point, it's all just a matter of a psychology and account size. We treat 100 quid of risk exactly the same as 600 quid of risk because we've developed that psychology, and we've obviously got pretty decent account sizes for our personal account, but we've built those up over time. And we we don't behave any differently from £5 a point, £1 a point to £30 a point. It's as simple as that. And when we trade these a little bit more because of the current market conditions, we'll probably increase that leverage as well. But I'm not too bothered. I'm quite over 500 quid will do me for a day. Obviously spread betting, so no tax as well, which is fine. If we have a look at the market in hindsight, this was the trade. It went a little bit lower. It got down to the 40s eventually. That was a nasty candle. You won't have seen that. So it got down to about 47. So we took profit a little bit earlier. Then it's come back up. It's not a particularly that's not a very technical breakout B. What I mean by breakout B is it holds below the level, then comes back down. That's not particularly technical. But you can see it's sold off pretty heavily, hasn't it? But do I feel like I'm missing out? If you times 30 by where's my little bar? Where did we get in here? Times 30 by 200, which is a silly thing to do. How much money could you have made? But I'm not bothered about that. Do I expect to take a £6,000 move on the Dow? No, of course not. I haven't got a crystal ball. But this is sort of hindsight nonsense you'll get from people that, oh, look at that, if it held it, you'd have made £6,000 at £30 a point. It's like, you're an idiot. That's not unless you're on a demo account and you just keep holding them and then showing the ones that win. But that's not how we trade. We trade at the time. We're quite happy to get a quick, nice 1 hour, quite happy to make some decent money. And that'll do. So we had 2 opportunities today. Because we managed our risk in the first one, it was a very small loss, practically break even. And we had another opportunity this afternoon. Dow offers a nice one, and we took it. So 2 trades is probably a bit on the low side for us, but we found the markets were quite tight this AM session, and they moved quite a lot in the midday session. But we're not around for that. We don't want to be trading these low volume times, so there's no surprise there. But yeah, we're pretty happy with that today. But I'm glad I've just that's how we trade every day in our room. We take trades live in front of people. We demonstrate how we take losses, take wins, look for opportunities, mark up our charts. There's no hindsight stuff, and we just try and help people be better traders. Sometimes it's frustrating, sometimes it's absolutely brilliant. We go through the same emotions everyone else at trading. The difference is we don't act the same way that most traders do, as in we don't let our emotions affect the way we trade. Because there's nothing wrong with enjoying trading, but you just make sure you don't get euphoric. There's nothing wrong with getting a little bit annoyed at the market, providing you don't revenge trade. That's you can't necessarily control how you feel. You can sort of adapt and learn, but you can control how you behave, and that's one of the best things we demonstrate. So what I'd say to you is, why not come and join us? We work with 4 different brokers. All you literally have to do is go to our website, TradeRoom Plus, press free trial. We have arranged to cater for everyone. We have a FinSpreads account where you can trade at 10p a point, so you can risk a quid or 2 a trade if you're new, but you're wanting to learn how to trade. And then you can go all the way up to big leverage on sort of ETX type stuff as well. So if you open an account through one of these links, you can get a minimum of 2 free months with us, just for opening an account, and you don't need to trade until you're ready. And you can come in a live room, watch us go through a professional routine, watch us take trades every day, and learn some stuff from us. It really is as simple as that. And the reason we trade in front of people is it keeps us very accountable to our members. We trade as a team anyway, regardless of whether we project what we do or not, but we've chosen to project stuff. So we'd love you to come and join us. We're also available on Skype, and we're available on our email address, info@traderoomplus.com. There's our 3 Skypes, and if you go to our website, you can literally press on one of these. It'll add you on Skype. So just go to TradeRoom Plus, click on one of our names, add us on Skype, have a text chat with us, have a conversation with us one-on-one, and we'll just talk about your trading. We're not going to give you any stupid hard sell or anything like that. We're just going to have an honest conversation about trading. Your expectations might be wildly out of, you might be getting a reality check. Equally, you might be a little bit overly cautious, and you might just need help with a bit of a next step. Quite happy just to have an honest and candid discussion about trading. So yeah, it'd be great if some of you could come and join us. Like I say, all you need to do is open an account with a broker. You don't need to risk your capital until you're comfortable. What I generally say is, just watch what we do for the first couple of weeks, the first 3 weeks, the first month. Just come in the live room, watch our professional routine, look how we trade, see if it's something that you like and strategies that you think you could use. Come and interact with all our members. We have a big Skype chat room where everyone interacts and talks to each other about trading. And yeah, it's as simple as that. We're the only people we know of that trade live in front of people using real money. You won't find any hindsight trades. It's all taken at the time, live, in front of all our members. Are there any questions, guys? I see there are a few. Did you use any more indicators on that Dow trade? No, just the ones we've demonstrated. We used just mainly the price action that touches the levels there. MACD was looking pretty negative across all time frames as well, but it was mainly the touches, just a reoccurring pattern, which you see levels like that. It's getting wedged down, you can see. If it had faked out, we may have been able to get a stop break even. We probably wouldn't let a 10-point trade go offside. Equally, had it just come up and taken a stop, that's fine. That's the way trading goes. You've got to be able to take your losses as well as your wins. Simple as that, really. So that was a pretty good trade. We're happy with that one. Any further questions? See, there's a few. I've got yes, the new question. I don't know what question is there. Yeah, you've never thought about risk reward in that way. Yeah, that's understandable. It's a dynamic thing. It changes throughout the trade. Just because you've got a 10-point stop initially doesn't mean that your risk is 10 points for the entire trade, is it? You just look for invalidation and bring your stop in. Simple as that. You've got to make sure you're not strangling your trade, though. That's a very easy thing that traders do, is strangle the trades. We don't do that. Do we scale out on the momentum trades? No, we don't. We do scale out on some trades, but not this particular strategy. We've just worked out from all the expectancy of it. It's better just take the whole chunk rather than scale out. You're on a 1 minute time frame. You're not going to be taking generally 30, 40 point moves where you're going to scale out on a 1 minute time frame. So quite happy just take a quick 10, 15 points. Excuse me, I'm just coming off the back of a cold. Any further questions? Can I, if I open up 2 brokers, can I add up the months together? Yes, you can. You canny person figuring that out. You can keep opening the brokers and just getting 3 months of us. Some people have been with us 6 months just through doing that, and they've learnt quite a lot and learnt quite a few strategies. So yes, there's no reason you can't just open multiple accounts, and we'll just add the months together. We're certainly going to be here in 6 months. Yeah, you can add us on Skype. We'll have a chat with you about your trading. That's no problem. The 3 Skype. If you go onto our website, like I say, the account registrations add up. Yeah, like I say, they are sequential, one another. How many trades do you take a month? 50 to 70, probably going to be increasing with these momentum and positional trades, I would say. We're just about to put reversals back into the pot as well. We're just doing a little bit more work on those over this next week or so. So yeah, we take quite a lot of trades. It's very unlikely you're not going to find an opportunity in the morning or afternoon. For those who've got clicky fingers, it might be best just to be able to take trades that actually have a plan behind them rather than just trading for the sake of it. Very easy to take unplanned trades. Unless you can take planned ones, then you've got a reason to get in. But yeah, the 1 minute is fast, but like I say, the good thing about the 1 minute trades is that your psychology, you get to practice your trading psychology very, very well. How do you decide 20 points as a target? It was fundamentally the one-to-one risk-reward ratio. We did have levels we did have a level, albeit it wasn't marked up on the chart at sort of 53 that we might have found some support from as well that we initially did. So it was mainly 1R for that one, wasn't it? When do you plan the next day's trades? We plan them in the morning. We start at we get up at 7 a.m. Michael and I'll have a conversation and planning session until approximately 7:45. We will then come on the microphone just as I am now, talk you through our trade plan until 8 o'clock, and then we'll execute the trade plan. Some trades won't be planned for. Well, they will, because we'll be avoiding areas, but like the 1-minute momentum trades, they can crop up relatively quickly, so they'll be planning during the sessions, whereas more longer-term key support and resistance levels will probably be planned beforehand. So we do the plans at the time. We mark up our charts of what we're interested in with text and graphics, lines, boxes, and other stuff, and so we tend to plan there. We do have a look at stuff out of hours as well, and look at longer-term things, but we don't. We just brief members at the time. To take a, do you use William percentage R for oversold or overbought? No, we don't, Roger. That's not an indicator we have in our methodology. There's plenty, as I'm sure you're aware, there's loads of indicators. I know RSI is obviously a very similar one to that as well. But that's just not one that's in our methodology. We're not, we're very careful about what we put into a decision-making pot. We only put a certain amount of indicators in. If it's simple as that. A lot of people can over-indicator, if you like, and you can find a signal to tell you anything. But if it doesn't help with we've got to be very, very critical about your decision making. And there's no, like I said, there's no right and wrong. The only right and wrong in the markets is to consistently make money. But no, that's not one we use. Could maybe in the future. We do when we do look at mechanical things. Maybe we do. Do you take a longer term view or just short term? We're doing a lot of short stuff at the moment, Tom, but we also are looking at some longer-term things as well. We did do some longer-term daily options and things like that, but they're a bit more weekly options, but they're very, very different. As anyone knows about options, they're all completely made up on the, whereas real options are monthly and things like that, and it's a lot more difficult, spreads and things like that. But we do take some longer-term views as well, and if we're starting to see this sort of increase in ATRs, there will be opportunities to hold and take some overnight trades and things like that as well, once in probably a scaled out and safe position. Markets are often unpredictable. When would you not trade? I heard if choppy, better to stay out. We wouldn't trade if there. Well, depends on the strategy. Let's just keep it in today's context. These positional trades where we're actually in the market with stop loss, as opposed to binary options, tunnels, ladders, or other instruments you can make money. We wouldn't trade over major news with these sort of strategies. We wouldn't trade on a bank holiday. We wouldn't trade in certain areas of the market if it's just been flat and chopping it all day, like you say. So that's the only predefined ones, is mainly news and bank holidays is when we wouldn't trade. Certain times of day we wouldn't trade and things like that, so that all goes in our plan. But the flat and choppy market can very quickly turn into a trending market on the time frames that we're looking at, so we tend not to try and prejudge that much. We just let the market show us what it wants to do and try and make the most of the opportunities. Do you trade currencies and commodities? No, we just trade the DAX, Dow and FTSE. The strategies would work on other things, but master of jack of all trades or master of a few. That's the balance you've got to make. Simple as that, and believe me, the focus is intense enough to focus on 3 indices, particularly when they're all open in the PM session. Although the FTSE is relatively slow, the DAX and Dow, particularly the Dow, is pretty monstrous at times, so you've just got to really focus on that sort of thing. Any further questions, guys? Thank you for your interaction, it's really good. I'm starting to lose my voice, but it's all good. Does anyone trade like this? Do you trade these positional things? Do you have a plan? Do you have a structure? Could you benefit from seeing guys who work so hard and trade trade professionally? Ask yourself that. Even if you have got a range of strategies, would it hurt you to come and see how someone else trades? Would it hurt to see how else someone cuts losses, deals with frustrations of the market, has a plan in place, goes through a professional routine? Adults like role. The way adults learn is often through role modeling. Will it help to see 3 people go about work as a team? Think about trading. How many banks and institutions do you think work in isolation? They don't. They work as a team. They've got risk managers. They've got analysts. They've got the head traders, lead traders, the prop traders, market makers, all working as a big team. you know, we've been mad to work as your own as a trader. That's why we work as a team, and we don't just include ourselves as a team. We include or count ourselves as a team. We count all our members as a team as well. Yeah, ultimately, we're just trying to make a profitable trading community. You know, these trades, and people say, well, why do you want to show your strategies to everyone else? Well, we're not, like I say at the beginning of the session, we ain't reinventing the wheel. You know, these are things that are done every time. The key is, and again, like I said at the beginning of the session, the key is how well you can master your discipline, how well you can cut losses, how well you can run winners, how well you can break the psychological barriers of risking 50 quid, 100 quid, 200 quid, 300 quid. You know, there's some trades that other strategies where I've been risking £1,000. Could have easily lost that. Can you psychologically handle that? And they're the key things about trading. Yeah, we don't overly worry about points. It's more just the leverage and things. So that's about it. But yeah, add us on Skype, guys, if you want to speak about anything. Come join us for a couple of months. See if we can help you. Simple as that, really. Unless there's any further questions, I will bid you good night. Remember, you can email us, add us on Skype. I'm going to get going because my voice is starting to go. But thank you all for attending. I hope you got something out of the session. Any more questions? I think Michael and Mark are going to be around to answer those. And yeah, thank you. Good night.